Hello everyone. This is a story finance gone wrong. The Credit Suisse story is the story of one of the most important banking institutions in Europe. Credit Suisse Group AG is a global investment bank and financial services firm founded and based in Switzerland. In terms of assets, Credit Suisse Group AG is the 40th largest bank in the world. It begs the question what the crisis is about. One of the oldest and most powerful banks in the world is Credit Suisse. Even though the bank is well known for its power and strength, it has reached an all-time low. Since the beginning of this year, Credit Suisse's share price has dropped by 61%. The credit default swap spreads on Credit Suisse debt have risen to their highest level in 14 years as on September 30th. We can see the basis points increased to 249 points. A letter by Chief Executive Ulrich Körner to the employees of Credit Suisse on September 30th marks the latest event that stirs up concerns. I know it's not easy to remain focused amid the many stories you read in the media, in particular, given the many factually inaccurate statements being made, he expressed in the letter. Note that Credit Suisse only had 50,110 employees at the end of the year 2021. Also, by this time, it was in charge of assets worth 1.62 trillion Swiss francs. But since the financial crisis of 2008, Credit Suisse's market value has been going down. So what accounted for this sharp decline? The main reason for this situation is that Credit Suisse made risky bets and lost a large amount of investor money quickly. The bank instructed a lot of its customers to invest around $10 billion in Greensill Capital, which is a lender of sorts itself. The Greensill Capital acted as a middleman between customers and suppliers. Everything was going well, and Greensill Capital was getting a lot of attention and money because banks like Credit Suisse believed in the business. Greensill's ability to stay in business was questioned more and more over time. Unfortunately, by October 2021, bankruptcy court confirms plan of liquidation for Greensill Capital filed. Archegos Capital Management also went bankrupt around the same time as Credit Suisse, adding to its problems. Because of this event, Credit Suisse had to take a $5.5 billion loss. Further, when CEO Tidjane Thiam had to leave, that was a big deal that people should remember. He quit because it was clear that he had been spying on Iqbal Khan, who was an executive at Credit Suisse in charge of wealth management. Many of these wrongdoings and sneaky ways out became common. Now, what was the impact of this on Credit Suisse? Credit Suisse's bond price has gone down because not many people are willing to lend money to the bank. This has also caused yields to rise very quickly to roughly 8%, indicating that there is a higher chance of default risk. Further, we can see how significant the percentage difference is between Credit Suisse and UBS. It's a huge problem, especially when growth prospects aren't looking good and interest rates are going up to keep inflation in check. What is Credit Suisse doing to come out of the crisis? The bank is already working to fix the damage by making its wealth management business stronger, and by changing its investment banking business. The risk-weighted value of a bank's assets or loans is used to figure out the bank's core equity capital. The constant leverage ratio indicates that there is no massive threat to the solvency of the bank as the equity, and the assets of the bank are enough to cover the debt load of the corporation. However, the bank's core capital ratio weakened to 13.5% at the end of the second quarter 2022, from 13.8% at the end of first quarter 2022. But with a new capital increase would bolster Credit Suisse's balance sheet and also send a positive signal. On the market, a core equity capital ratio of over 8% is seen as good. So, is Credit Suisse now a risk like the Lehman Brothers? If the bank fails, the global financial market will be affected right away. But we aren't there yet, and the hope is that the bank will be back in the green. But there are other threats that are always there. The tightening of money by central banks around the world is a bigger worry than the situation with Credit Suisse. In the first chart, we can see the federal rate increased to 2.33% following contractionary monetary policy, resulting in consumers and businesses borrowing less. Similarly, we can see for Swiss National Bank the interest rate increased to 0.5, while the base rate in Switzerland is negative 0.75. The first two events, COVID and the conflict between Russia and Ukraine, have already created a lot of risk for banks in the form of rising interest rates for borrowers, a weakening currency, and a slowing economy, which could lead to borrowers not paying back their loans. In this case, if Credit Suisse goes bankrupt, it could make things worse. Now, the question is, should India be concerned? Short answer is yes, there is always a chance of a global financial crisis, but because Credit Suisse's operations in India are small, the threat to the Indian banking system is not very big. There is an Indian branch of Credit Suisse AG. It got into India in 1997, at the height of the East Asian currency crisis. India, on the other hand, was not affected by the currency crisis. Capital controls were one reason why. Like its parent, the bank's Indian branch focused on investment banking, wealth management, and share brokerage services. Here, we can see the comparison during the year 2019 to 20. The banking stability indicator shows that, among the 5 dimensions considered for assessing the changes in underlying conditions and risk factors, scheduled commercial banks have recorded deterioration in soundness, liquidity and efficiency in March 2020 as compared with the September 2019 position, whereas asset quality and profitability showed marginal improvement. Also, Credit Suisse AG does business in India, but not as a wholly owned subsidiary but as a branch. In India, foreign banks in total 45 have a small share of the market, with less than 2 to 2.5% of doubtful assets under them, while the actual loss assets are less than 0.5% during the year 2019 to 2020. Hence, clearly showing how minutiae the amount is compared to the rest of the banking sector. Credit Suisse's total loss capacity ratio in India is 37.6% in 2021. Which is much higher than the regulatory minimum of 16%. From January 1, 2022, it has been increased to 18% of risk-weighted assets. The Indian banking system is also very strong, with both banks and non-banks having a lot of equity and cash on hand. RBI data shows that in March 2019, the capital to risk-weighted assets ratio and the Common Equity Tier 1 ratio of Indian banks were increased in almost every segment respectively compared to the year 2018. Private banks and foreign banks remained well capitalized, and above the regulatory minimum of 10.875% for March 2019, though the former experienced a marginal decline in CRAR in 2018 to 19. The liquidity coverage ratio of scheduled commercial bank improved further in 2018 to 19 and remained well above the Basel III requirement of 100%. The consistent improvement in the capital to risk-weighted assets ratio of scheduled commercial banks continued throughout 2019 to 2020. However, we could see a fall in the ratio of foreign banks. But the fall could be well taken care by the visible shift in the CRAR distribution of banks. The median CRAR has increased from 12.3 in March 2008 to 13.3 in March 2020 shown in chart on the right. Whereas, RBI data shows that as on March 2021, the capital to risk-weighted assets ratio and provisional coverage ratio of commercial bank were as high as 16.03% and 68.86%, respectively. So, this brings us to the last part of the episode, that are study materials to help you understand critical movement in financial history. The first set of readings I've attached in the description will help you comprehend why Credit Suisse is in better shape than Lehman Brothers. Additionally, I have included links to relevant materials I use to illustrate the concepts behind this case study. That's all I have for you today. If you found this helpful, please subscribe to the channel and leave a positive comment to let YouTube know you found this video informative. You can contact us from the details mentioned on the screen via missed call, email, or WhatsApp. Thank you so much for watching. For the next one, I shall await your arrival.